Hey there, folks. This is Mitch Firestone with Precision Trading Labs in New York City. I am here to bring you a rundown on the previous trading week. Today, we're going to look at the SPY, which of course is the ETF of the S&P 500, and the QQQs, the ETF for the Nasdaq 100. We'll look at that for the last trading week, and then we'll also kind of take a look at it for the last rolling month, for the last, let's say, 22, 23, 24 trading days. After that, we'll take a quick look at the major sectors, and we'll identify the areas of relative strength and relative weakness for those. And then we'll actually bring up some live charts, and we'll take a look at the SPYs and the QQQs in depth. And then we'll also look at a couple of other symbols as well. So that's kind of the agenda here. Before I go on here, though, of course, the ubiquitous disclaimer, Precision Trading Labs, we are not financial advisors or fiduciaries. Everything we're doing is for informational and educational purposes only. Okay, so at any rate, let's take a look at the market action from last week, and we will go from there. This is what the last week looked like. So we're looking here at a kind of a bare bones chart of the SPY, the Qs, and I also threw in the IWM, the ETF of the Russell 2000. So this is the last 5 trading days from last week. So here was the close of the previous Friday on April 14th, and here, of course, is the close for the 21st. So this is we set that as the 0 point for the week. So we can see pretty quiet week here. The SPY was virtually flat. The Russell 2000 was up about 0.6%, and the Qs were pretty much down about the same, about 0.6%. Kind of surprising because of the fact that we are now in the midst of earnings week, earnings season, and more often than not, you tend to get some moves as the market kind of either gives thumbs up or thumbs down to earnings announcements. But for whatever reason, last week was actually pretty quiet. So that was the story for those indexes, for the broad market indexes. And we can see contributing to that, though, if we take a look at the sectors, here is the same exact chart, but for the 13 major sectors. So this is, the financials, utilities, consumer staples, all of those. So these are the 13 primary sector ETFs that most people tend to look at. And so, again, we have that same 0 point on the close of last Friday. And then here, of course, are our 5 trading days. The big blue dot there, that's actually the S&P. And of course, as we said, the S&P was virtually flat for the week. And of course, that's sitting there right on top of the 0 line there. So everything above here, these are the areas of relative strength. So the consumer staples were at the top, and then real estate was up there as well. When I show you the rolling month, we'll kind of see some stark differences between what went on during the previous week versus what's been going on for the rolling month. Okay, but for last week, these are what I would consider to be kind of the relative strength sectors, if you can call having relative strength in a virtually flat week. The consumer staples were only up basically 2% last week, and the industrials were up about 1%. So these are all clustered and actually, obviously, in a very tight, rather insignificant green range. But these are, so those are your areas of, relative strength, such as it is. These are what I consider to be the between sectors. And again, these are just, kind of clustered around that 0 point. And then the only real areas, of course, of actual relative difference was really on the downside in terms of relative weakness. And that's energy and communications. Okay. And you'll see when we look at the rolling month, though, in particular with energy is actually sitting, I think pretty much at the top of on the rolling month. So this might just be considered to be kind of a normal pullback because, of course, as we know, nothing goes up or down in a straight line. So it's quite possible that, energy, we still may be bullish on energy, and this is just kind of a normal pullback in the continuum of normal market action. But we'll see. So at any rate, these are the relative sectors here. And in fact, we'll be actually doing another video that follows from this one. And then we'll actually kind of talk about how we use these particular areas, the pockets of relative strength and weakness, in order to then formulate trades in terms of what our search process is, and then how we actually put together our trades. So we'll certainly take a look at that in a subsequent video. Okay. So at any rate, here is the last trading week. Okay. Now here's the rolling month. Okay. So this is the rolling month. So this actually goes back, and at least my definition of a rolling month is I basically use the last 5 weeks. And so as a result, what we're looking here are, here's a 0 point there on March 17th. And then these are, and this is a weekly, this represents a weekly chart. So there's 1, 2, 3, 4, 5 weeks there. And that, of course, depending on holidays, that represents typically anywhere from, let's say 23 to 25 trading days, depending on what, how the holidays shake out. So at any rate, this is what this is the rolling month. And so we can see, of course, energy is up about 10%. It was obviously up more, but as I just showed you in the last week, we did have that pullback, and that pullback, on the weekly, on the previous week chart, that's that jog down from that high point there. So we can see energy is still low, head and shoulders above all the other sectors, and until proven otherwise, one is not going to necessarily say, well, all right, well, energy, the uptrend in energy is over. As I said, nothing goes up or down in a straight line, and so this may just be a normal, normal pullback. And until proven otherwise, I would kind of regard this last jog down as kind of a correction in the face of a bigger picture uptrend. Okay, so that's energy. And then again, here are the pockets of relative strength here, in a sort of a second tier of relative strength. And so we get the financials, healthcare, materials, consumer staples, and communications. And then in terms of the relative weakness, and again, that's relative. The consumer discretionaries, it's still up, about 4.5% here. Okay, and even the weakest stock, the real estate, it's still up 2% over the past month. So there's certainly nothing that's actually negative here. But in terms of if you're looking at the concept of relative strength and weakness, well, then these are relatively weaker certainly than the S&P, okay, which is sitting there at about 5.7% for this rolling month. Okay, so again, we'll talk about in a subsequent video what we can do with this information in terms of creating and actually looking at some setup creation based on that. Okay, so if we now go to the live charts, here's the SPY. So we at Precision Trading Labs, we look at everything through the lens of the trading principle of supply and demand, where essentially we're looking for these turns in price and these chart patterns which suggest that there is an exhaustion of buyers or sellers at particular levels. And when price leaves those areas with a great deal of energy and goes a decent distance, and they spend very little time in those levels, that suggests that there is additional price pressure that's waiting to be tapped the next time price returns to that level. Okay, and so that's that little explanation right here. And so what we have here, if we look at, let's say, in this level right here, okay, price dipped down here on that red candle there. Okay, there was a bullish green candle right next to it. It spends very little time actually at this level, but basically 2 candles, and then there's a gap up, a little pause, and then another bullish candle, another pause, and then it kind of makes this essentially this major price swing from here to here. Okay. And so right here, supply and demand for shares, they were in balance, but then they go out of balance once this pop occurs. And so essentially what happened is there was an exhaustion of sellers at this level, and essentially buyers had to run up the price chart until they could find willing sellers at higher prices. And that's the only way, of course, that these trades could have occurred. obviously traders and investors and, institutions, and retail traders, people may have put bids in at 396, but there were no takers. And so as a result, what happened was, probably people, bids got put in at 396, 97, and really only there were only takers once you got just below 400. Okay, so that's kind of the narrative of what went on at this level. Okay, and so we basically have this here, an area of expected price pressure, upward price pressure, and that's created by it's a period of consolidation in that tight range, which is right there. Okay, then there's an exhaustion of sellers in the range. Okay, then we have an energetic move, a bullish move, as the sellers essentially went up the price chart. Okay, and basically what we need, the buyers ran up the price chart until they found willing sellers at higher prices. That's the narrative there. Okay, so what we're waiting for essentially is for price to return to this level of demand. Okay, in order to go long or to have a bullish trade. Similarly, we actually have a level. Now, I use this one as the example here, but in fact, there's actually a nearer term one that's right here. Okay, and again, this was the source of consolidation right there. And then notice that there's a little gap, a bullish candle, and then there's a swing up to here. Okay, and so what we're looking for, okay, this is where we are at current price right here. So what I did was I drew lines from current price, and I extended these lines down to these various levels of either supply or demand in the SPY. Okay, so over here, this line from here to the front door of this level right here, that's about 2% down. Okay, the level that I was just using as the example here, that's about 4% down. Okay, and then similarly on the upside, there was a level of supply up here, which actually got created in August of 2022. And that's sitting up here, and I'll go back, I'll show that to you in a second. But that level is about 3 1/3% up. And so if I just kind of swing back in the chart for a second, okay, right there, this is that area of supply here. And in fact, it looks a little sloppy here in the 2-hour chart, which is what we're looking at here. But in fact, if I turn this into a daily chart, you'll see that this kind of cleans up nice, and you'll see right there. Okay, that's that level. So price rallies up here. You can see there's some major sideways action. Notice the bullish candle down. There's a gap. Okay, another bearish candle down, gap, another bearish candle. Then there's a kind of a pause here, and then it kind of continues down, on that swing there. So this is an area of downward price pressure, and we expect that when price comes back to that, and I'm going to go back to the 2-hour chart now. When price returns here, we're going to expect to see basically another push down from here. There's the expectation that there is still untapped downward price pressure in there, that there either there's not literally unfilled sell orders there, but this was an area that traders really wanted to sell. And the question is, because price didn't spend a tremendous amount of time at that level, it's quite likely that that's still an area of interest to selling. And so that's the whole principle of what we're kind of looking at for these setups here. Right here, this was an area we had identified earlier on when price was down here. And when price returned here, there was the expectation perhaps that we would get a shot down for the reason that we just said. And so we can see right here, price came up into this level, but in fact, price got stopped by this level. But it's just gotten stuck in here, and it's really not doing much of anything. It did drop a bit, and it's kind of now just going sideways in here. And so we're going to either see some sort of breakout, either to the upside or the downside here, because we kind of have this, and these are the Bollinger Bands here. And so we're kind of looking at a squeeze here. And so we'll kind of see which way it goes. But again, this level above here is about a little over 3% down. This one's about 2% down, and that's about 4% down. And that's an additional 2% down from there, or a total of 4% from current price. So I would expect probably in the next week or so, almost certainly we're gonna remain sort of range bound somewhere within the scope of this range, and perhaps even within this range from here to here. So this would be, a grand total of about 5% in terms of where I would expect to be, certainly for the next trading week. Okay, so that's what we're looking at on the SPY. If we turn over to the Qs now, some of what we're looking at is somewhat reminiscent of that. Just spread that out a little here. So here is the Qs here. Over here we have this kind of looks like a level here. On the other hand, I don't really like this level because of all of this trading that occurred here. So this is actually this is what I would consider to be a lower probability zone here. Okay, so that's about 3% down. This is about 3% down from current price. Okay, the first real solid area of demand here, though, is about another 3% down, and you can see that's about 6% from current price. Okay, so that's what we're looking at on the Qs, and then above here, there's kind of there's a level here about 3 3/4% up. And again, if we slide back here, and I believe we'll be back into 2022, this is really the same picture that we were looking at on the SPY when I turned it into the daily chart. It's really more or less the same picture here. So that's what's going on with the Qs. Lastly, I'm going to take a look at Apple as for a couple of other symbols that people tend to look at a lot. All right. So here is Apple, and again the same sort of analysis here of looking for these regions of supply and demand here. Okay, and so right here we kind of have a drop, a base, and a rally there. And again, if I turn this into a daily chart, this area probably in a sense cleans up, probably makes it look a little neater and a little prettier. And you can see right there, price dropped in here. Okay, then we had that bearish candle that kind of finished the drop in there. Okay, then we have a reversal here, a very, very bullish candle out of there. And then not a spectacular move out after that. Okay, but then and then we had another little pop here. So again, we're waiting for a pullback here, and this is a potential long setup in here. We'll see what the return to the zone looks like when we do get a pullback, and then we'll make our decision as to whether we're going to actually look for a bullish trade out of that. Okay, and so that area is about 2% down, and then over here there's another level down, which was actually just kissed by a return to the level, but that was kind of almost incidental contact here. So this level could very well still be valid. Okay, and that's about 5.5% from current price. And then further down, there's another level down here. These are both in 2-hour charts here, and then this one down here is about 8% off from where we are at current price. Okay, so that's where we are on the downside there in terms of looking for pullbacks into a demand zone in order to then go long, or to, let's say, buy calls in terms of a bullish trade. Okay, so that's Apple on the for demand zones. And then, of course, if we go back in time, we go back again to that same region of August 2022. Okay, right here we have that drop, a drop, a base, and then a drop there. Okay, again, not a spectacular exit because there's really not a whole lot of follow through here. Okay, but this is certainly the area where essentially you had an exhaustion of buyers here, and so the buyers essentially left the building, and sellers ran down the price chart in order to then sell at lower prices because that was the only way that their asks would get accepted. And so as a result, when the price returns to this level, we expect to see another shot down. And so that's the thesis for a short trade or a bearish trade at that level. Okay. Okay. So that's what we're looking at on Apple. And then the last thing we were looking at is Tesla. And we're going to see, unlike these other charts where the levels are within, let's say like a relatively kind of near term where we could expect to see returns to the level, in some reasonable amount of time. With Tesla, everything is far more spread out. Okay. And which also raises the possibility that what we have here is that the supply and demand levels are spread out, which oftentimes sets the stage for kind of bigger moves because of the fact that there aren't clean areas of supply or demand to stop to stop a longer term trend once it gets going. And so as a result, we will be looking for supply and demand levels to either go long or short out of, but also if an opportunity for a breakout trade presents itself, then in fact, Tesla actually offers really kind of a great canvas for that kind of trade, because of the fact that there presumably are not going to be clean levels. They're going to get in the way of a trade once it actually gets going. Okay, so we can see right here at here's where we are at current price. Well, up here, again, if we turn this into a daily chart, okay, that's about 10% away. Okay, we're at 160 now. This level here, which is really a daily zone, that's at 182. Okay, that's 10% away. Okay, on the downside here, we can see right here, I'm not in love with this level here, but this level, let's say down here, that's about 10% down. And then this really clean area here, that's about 20% down. So those are kind of a long way away. And then on the upside here, after this supply zone right here, if we then go up and we find the next really clean area, which is really up here, which hasn't been touched, okay, that's a long way away. Okay, that is actually, let's see, do I have the line here? Actually, I don't have the line here, but I can just replicate this quickly. And if I move this over here, pull this up, this is a long way away. That's like 33-34% away. So really after this supply zone here, the next really clean one on the daily chart is going to be way away. Okay, and that's a long ways away. And let me see, and that was the last time we saw that level. That was in about November of 2022. All right. So at any rate, that's the story with Tesla. So I want to leave you with this. Again, thank you for joining us. Hope you like what I shared with you here today. If you would like further information about PTO and how we look at the market, what our trading methodology is, and what our core principle of supply and demand, how that works in creating setups, you can go to the link in the description where you've got this video, and you're welcome to set up a call with us, and we would love to tell you about what we do in terms of the services that we provide our subscribers as well as their education. All right, at any rate, thank you again for the privilege of your time, and I will see you next time.